Currencies fail when everybody realizes that they can never stop printing money, and it's a mathematical certainty that the printing is going to grow larger over time. That's when currencies fail. That's how hyperinflation occurs. When everyone comes to that awareness, then everyone abandons the currency and the currency goes to zero. And then what we really need is sound money. And so we should start issuing gold-backed bonds and Bitcoin-backed bonds, and we should start trimming the deficit, and we should slowly but surely transition over to a sound money standard. I mean, and Besant has said things like, we need another Bretton Woods. He recognizes Triffitt's dilemma. This kind of a reset that I'm talking about is being discussed at the highest levels of the administration. We need to do a currency reset. It's simple.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Welcome to the Microscopic Podcast. My name is Alexei Joranov, and today is the 1st of July, and I'm joined with the one and only Larry Lepard. Last time we talked with each other was in Madeira in March 2024, and since then you've wrote a book, The Big Print. You're the author now. You can say you're an author.
Yeah, I'm an author, right? I've got a book.
Exactly, it's right there, and it is pretty timely because I guess maybe that's also a question to you would be why you wrote this book. But a lot of the contents of the book are actually coming really in a, I would say, great timing, because a lot of topics that you discuss, especially in the problem section, is very newsworthy. We're going to talk also about the big, beautiful bill that Donald Trump just passed and the consequences for this. But first of all, my question to you, what motivated you to even endure the treacherous road to write a book?
It was about 6 months of hard work and focus, but it really came quite easily because I'm very comfortable with the subject. I wrote it, Alexei, because I felt like there wasn't a book that explained to normies what I saw out there, which is that the financial system is broken. I mean, there's some really great books out there that I highly recommend, and that really in many ways better than mine. They're different. Probably Safe's The Bitcoin Standard is the most notable. Lynn's Broken Money, same story. Jeff Booth talked about deflation. I mean, I think all those books are key. I've given those books away to people, and often the reply I got back is people don't make their way through them. They're really well written. They're textbooky almost. And I thought, somebody needs to put this in terms that make it very easy for anybody to understand what's going on, how we got into this broken monetary system that we now are all enduring. And then, of course, that's the book says, for those who aren't familiar, the first half of the book is the problem and the second half is the solution. And so the problem is, fiat money and central banks and fractional reserve banking have created a constant state of inflation, and it's only gotten worse over time. And pretty much everybody, I think, is very much aware of the inflation problem anywhere in the world. I mean, if you shop for groceries, you can't help but be aware of the inflation problem. And so, but what I saw last year, I was watching some of the political debates in the United States, and they were all arguing about stuff that didn't matter. And so my reaction was, gosh, guys, you're missing the big picture here. You're arguing about all these other items, and in reality, what's causing the biggest amount of pain for most people is inflation. And so, having been a investment manager my whole career, and having been a sound money advocate for pretty much my whole career, and having studied Austrian economics, I thought I had a pretty clear vision of what's wrong, and that maybe I should try and take an attempt at explaining it in terms that somebody without an economic background could read and understand and go, oh yeah, now I get it. I understand why we were suffering through this pain. I understand how the problem got created. And then, of course, more importantly, part 2 of the book is how do we fix this? Because, it's broken. It appears to be getting worse. And so obviously those of us who are Bitcoiners and sound money advocates really want to fix it. And Bitcoin does fix it. Although, we're still in the early days of Bitcoin replacing fiat currency, but I think that'll happen. So that was why I wrote the book. And, to me, success will be if normies, people who don't necessarily even know what the Federal Reserve is, I tried it on somebody early on and they started reading, they said, hang on, tell me what the Federal Reserve is. I was like, okay, I've got to really make it clear how this got, how we got into this situation. If normies are able to read it and go, oh, wow, I see it now. I really understand what the issue is. And this is what we need to focus on, more than team blue or team red or, all the other nonsense that the political sphere is arguing about. Right. So that's why I wrote the book, and it'll succeed if it jumps out of Bitcoin land. I mean, I'm deeply appreciative of how much success it's had in Bitcoin land, how Bitcoiners get it, because we're all pretty much of one mind. But really, that's not the target audience. The target audience is regular people who don't understand the monetary system, but need to understand the monetary system if they want to have a chance of protecting themselves and changing it. So that's kind of that's the prelude to how I got to writing the book.
And in the first part, as you mentioned, you defined a problem that is riddling, especially also America, and the fact that America is eroding, and that through central bank policies since the 1913, the creation of the Federal Reserve, this has only been worsened. And my first question related to that part would be the fact that you've mentioned a period between 1800 and 1971,
Yeah,
that America experienced deflationary periods alongside also
yeah,
immense growth.
yeah.
Why do you think that modern economists insist that inflation is necessary for growth, despite
Yeah,
ample historical content evidence?
Yeah, as you know, I talked about this a great deal in the book. I mean, the Keynesian economic school, I mean, John Maynard Keynes, famous economist, the early 20th century, developed the notion that we need inflation in order to prevent downturns and, to kindle what he called animal spirits. And what I would submit is that no, we don't. In fact, deflation is the natural state of a productive economy. But the Keynesians have hijacked the schools of economic thought, and very conveniently, by the way, because that puts them in positions of power, and they get paid a lot, and they get professorships, and they get paid to write for journals and everything else, and they've really kind of obscured the natural truth, which is that a deflationary economy is a better economy, it's healthier, and everybody benefits from it. I mean, I think one of the things that's most interesting is that, and most people are kind of looking at things in the last 10 years, 20 years, even 40 years, and they don't realize that between the founding of the country in 1789, and 1913, when the Fed was created and we really started having more serious inflation, the country did incredibly well. I mean, living standards improved, and it was a deflationary period. And of course, they try and paint it as it was a dark period, and there were financial panics, and there were some. I mean, the banking system had some trouble, but the point is that in general, life living standards increased enormously throughout the entire 19th century, and it was not necessarily an inflationary century. It was a little bit because they inflated in the War of 1812, they inflated in the Civil War when they did greenbacks, and there were some other things. We went on a bimetallic standard, and there was some inflation in there. But the point is, in general, the Keynesians have stolen the economic narrative for their own benefit, and because if you assume that the government is necessary to prevent deflation, well, then you've got to have a Federal Reserve, and you've got to have all these big, powerful people. And by the way, it gives government a lot of power because they can print money to pay for wars and all these things that come along with that model. So it's really kind of one hand, shaking the other. I mean, the Keynesians and the government have gotten in bed together and created a system that is good for, wealthy people. It's good for the government. It's good for Keynesians, but it's bad for the rest of us because we go to the grocery store and pay higher prices. So to kind of quickly summarize, and I talk about, there's a chapter in there where I talk about how, I mean, it's amazing. The Federal Reserve spends millions of dollars per year supporting monetary journals, and those monetary journals only talk about Keynesianism as being the correct solution, when in fact the Austrian model has been a much better predictor of what's happened. So, but this is all, it's all very predictable, and it's all very broken, and it's now coming to a head. I mean, we're now at the stage where we can't sweep it under the rug any longer. I mean, and it's so there's been a deterioration, and that's why in the first half of the book, one of the things I thought was important, and I was able to do it because I'm a bit older and I've seen a lot of this, was I tried to lay out the history of how the deterioration took place. And it started with the Fed. It started before the Fed. It started with greenbacks, but then it started with the Fed. And then, Roosevelt grabbed the gold and that didn't help. And then 1971 was when all hell broke loose. And there's a great chart in the book that shows how, inflation has just been out of control since 1971. And sadly, it's only gotten worse. I mean, this recent COVID example, they printed 40% of the money supply in 2 years. And that's why the grocery store is such a nightmare. And furthermore, the book goes on to show, as Lynn Alden and others have pointed out, that the train isn't going to stop, that it's only getting, with each progressive cycle, it's getting worse. And so, the real solution to this problem is to return to sound money. But that's like telling a drunk to stop drinking. I mean, they don't want to. And so it's going to probably be painful to go through that transition. But there it is.
Mhm. I have a bold question, but do you think that inflation, since it's a monetary phenomena, would be eradicated if central banks cease to exist?
Well, yes. I mean, somewhat depending upon what the currency is and if fractional reserve banking is allowed. But I think it would be greatly, yes, in a large form, it would be eradicated. Because I mean, the reason that I mean, the money gets created two or three ways. But I mean, one of the ways it gets created is when they just do direct stimulus, like they did in COVID, where they print the money and send it out. Another way it gets created is the banks, increase loans and create money out of thin air, um, and then increase the money supply, which then leads to inflation. And the banks are only able to do that because they know that if they print too much money or make too many risky loans, they'll be backed up. They'll be bailed out. And so the Federal Reserve really was formed to be the backstop for the banks, and it really created a one-way ticket for the banks to, have heads we win, tails we lose. I mean, they ran an enormous Ponzi scheme in 2008, in the housing marketplace, and then when it all came crashing down, as it naturally would, given there was too much leverage, the Fed bailed them out and wrote checks to bail them out. So and QE expanded the money supply, so or the reserve supply, which then flowed into the money supply. So yeah, I mean, without central banks, things would be better. I mean, what we really need to do is be on a sound money standard. We need to transact in a money that can't be printed by the government. And there really are only three things that qualify, and they are, Bitcoin, gold, and silver.
So I want to go back to the more root cause problems and especially the hollowing out of the industrial base, specifically
Yeah,
to America, because
yeah,
that was big on that is big on the Trump's administration's agenda and set of policies that they're trying to reindustrialize America.
yeah.
And my question to you is, do you think it's even possible to reindustrialize America?
Well, it's a great question, and the answer is to lean in that direction. Absolutely, yes. It's a process that's taken place over 40 years, and maybe more realistically over 25 years when China entered the WTO. But yes, I mean, if we had a neutral reserve, I mean, the reason the U.S. industrial base has been hollowed out is something called Triffin's dilemma, which suggests that when you have the reserve currency, that currency by definition becomes overvalued, which then makes your exports less competitive and it allows other countries to be mercantilists like China and make cheap stuff and send it to you. And so that's why the manufacturing base in the U.S. disappeared, or went down substantially from 2000 to the present day. Can we bring it back? Absolutely. We can't bring it back though without revaluing the dollar much lower in terms of goods and services, which is massive inflation. And but yes, we can bring back, and some of it we don't want to bring back. I mean, the absolute lowest tier, smallest, incremental value added, that probably should be done overseas. But the point is, we've gone far too extreme in one direction, which is just we've become a service economy with technology and defense and weapons sitting at the top of it. And even that, I mean, we've created a problem for ourselves in that we're now seeing that a lot of these rare earths that the defense manufacturers and others need to build things with, we can't even get them anymore. They're in China, and China's kind of got a chokehold on them. So yeah, it's a real problem. But yes, the answer to your question is yes, we can reshore a lot of things. We can get a much more balanced world than we would if the dollar weren't the world's reserve currency, if Bitcoin or gold were the world's reserve currency. But to add on to your question, can it happen overnight? No. Can Trump solve it in 4 years? Absolutely not. This has been a very insidious long-term process, and repairing it is going to take time. And but we can and we will, and I think a neutral reserve currency will lead to a much more balanced world where every country will perform those things that are that it has a competitive advantage at performing.
On that, I would like to also add, you have also argued that the fiat system then, yeah, hollows out the real economic productivity in favor of asset inflation, which we've seen especially in the past few years since the COVID stimuli. Can you trace maybe the mechanisms that by which the process, this particular process distorts the capital allocation in sectors like energy, transportation, infrastructure, manufacturing?
What basically happens is when you make capital free, you find that, and we did when we went to ZERP, you find all kinds of distortions that occur. But as I said in the earlier comment, the biggest distortion is that the dollar gets overvalued, and we can't competitively do things anymore with an overvalued dollar. We can't, ship exports, etc. And the economy gets very much financialized and lives from one bubble to the next. I mean, we had a dot-com bubble that burst. We had a housing bubble that burst. I would submit that we are now in what I call the everything bubble. And that's just because all these assets are overvalued in dollar terms, or said another way, we've got to mark the dollar down very substantially compared to all these assets, which, by the way, is extremely inflationary. So I would contend that we now live in an age of inflation, and that the fact that we've built up this enormous burden of debt has really it's distorted everything. Nothing's correctly priced. And so energy guys aren't getting paid properly for the work they're doing. Nobody's getting paid the right amounts. All the prices are wrong. And the reason the prices are wrong is that the interest rates have been wrong for so long, that nobody knows what really is a good investment, because they're not looking at it on real terms. They're looking at it in nominal terms, and it's that I mean, when you have a 0% interest rate, that's just crazy. I mean, it's absolutely crazy. It's like a sin against capitalism. I mean, if in theory, if money has no return, then what's the value of money? It's worthless. And of course, fiat money is kind of worthless. So there's some symmetry there. But the point is that it's just these distortions that have made our lives so much harder. And we also, I mean, the U.S. did a lot of other stupid things too. We managed to go get ourselves in a bunch of wars and piss away $8 trillion in the Middle East, only to take over some countries and then give them back. And that wasn't productive. I mean, in the same time frame, the Chinese were investing heavily in their electricity infrastructure and nuclear power and manufacturing. And I mean, if a society has capital, which we have because we've been around a long time and we've done a lot of great things, and they piss away the capital on stuff that doesn't add any value, like building military equipment, shipping it to Afghanistan, fighting a bunch of guys, in sandals, and then turning around, leaving the equipment behind and abandoning it, right? I mean, that's not a productive thing. I mean, that money could have been spent, building high speed rail, or making our bridges safer, or making our economy more efficient, or, you know, uh, bolstering the electricity infrastructure, or building nuclear power, which is the most efficient form of power in the world. I mean, so, but we didn't do it. And how do we pay for all that? Well, we paid for it because the interest rates were so low. It didn't seem like there was a cost to it, but in fact, there is. And so, and sadly, that cost is now starting to show up in a lot of places, we've gotten so far down that road that we can't continue there. I mean, it's when you have COVID come along and we can't even get masks because all the masks are made in China. Well, strategically that's a problem. And when we've got when we're supposedly the leading weapons manufacturer in the world, and yet we can't keep up with Russia in terms of producing weapons because we can't get the rare earths out of China. Well, that's a problem. So, there are issues here with this system that even the Pentagon and the defense industry realizes and understands. And so, we got to solve it, and we're going to solve it. And Trump's trying to solve it. I mean, I give him a lot of credit. I think I don't think he entirely understands all of it. I think the Senate does understand. I'm not sure Trump understands all of it, but I think he's doing his best to reverse this trend towards globalization that has, hurt America in many ways. So, and I hope he's successful at it. I think will he get all the way to where he wants to be in 4 years? No way. I mean, is he going to move the needle in the right direction? Probably. It certainly seems that way. So,
So I'm tempted to go to different directions here because we've
yeah,
touched
wherever
upon
you like.
a few things, and I'm tempted to actually jump right into the subject about the actuality, the news, the fact that first of all, Elon Musk a few weeks back, I mean, I think it's been 6 weeks or so, has been officially dismissed from the White House as the special employee that he was to lead the Doge initiative. There
Mhm.
was initially planned to cut trillions in, well, unproductive spending from the government side. And a lot of revelations came through about all kinds of programs that were funded that were deemed really ridiculous and so on. But eventually, it hit, well, um, some kind of a resistance, or there may be other reasons that we are not aware of, but that wasn't deemed successful in the end. They were able to cut a few millions, hundreds of millions, but the promised trillions were far from being reached. Um, let's focus on that. Do you think there were what were the factors that
Well,
you
yeah.
think is
So, look, I'm a huge supporter of Doge, and I think they did something good in that they made some progress. They uncovered a lot of fraud and ridiculous spending in the USAID, bucket, as well as some other areas, that they've taken and cut back. And I'm optimistic that it will reduce things by a couple hundred, $1 billion of annual spending. But recall that our deficit's running around $2 trillion. So even if it's 200 trillion that they save, that's 10%. So where do we get the other 90%? I think Elon, the dreamer and entrepreneur that he is, he was a little unrealistic when he said we could cut 2 trillion. I don't think he really looked at the numbers carefully, because you can't cut 2 trillion unless you want to cut defense and Social Security and Medicare, and those seem to be kind of untouchable. And I know that 2 trillion quickly became one, and the one is now 100 or 200, and arguably the swamp got him, or he got frustrated realizing that he wasn't going to get to where he wanted to be, and that therefore he was going to break with the administration. Look, that's all. I mean, to me, all that stuff is the drama there. It's all kind of Real Housewives of Washington D.C. I mean, I mean, you got yeah, it was nuts. I mean, he got in a fist fight with Besant because Besant called him a fraud, and then he was tweeting about Trump being on Epstein's. I mean, it's ridiculous. All of it's just ridiculous stuff. So, but and then of course what we see now is that this big beautiful bill has come through, and what really is the case is that Washington just can't help themselves. I mean, and the two people that stood against this got vilified. I mean, I like Trump in a lot of ways, but they got vilified by Trump. I mean, Thomas Massey and Rand Paul both fought back, pushed back very hard against all this spending in this bill and the raising of the debt ceiling. And Trump slammed them both. And I think what they were trying to do was patriotic, but that's neither here nor there. I mean, the fact is that the machine keeps on doing what the machine does, which is it grows and spends money. And you saw this now with both Besant and Trump kind of coming out with a new line, which is, well, we're not going to worry so much about the deficit, as we're going to grow our way out of it. And I hope they're right. I mean, if we get a lot of AI productivity and we got a lot of deregulation, those things will help growth. And so I'm very optimistic about those things being better than the other side was pushing, and that'll push us in the right direction. But again, can those solve the 1.8 trillion dollar deficit that we have post Doge? I don't think they can. I mean, until you get to meaningful entitlement reform, and or you look at the defense budget. I mean, I was kind of hoping Trump would at least keep the defense budget flat or maybe cut it. I mean, I've been at events with and spoken to David Stockman, who knows the defense budget incredibly well because he was a budget director at one point. And he just said there's just enormous fat in the defense budget. I mean, we spend, multiples of what any other country in the world spends. Now they're talking about they want a new fighter jet program. And, is that what we really need? I mean, if you listen to Eric Prince and some of the smart military guys, they're like, hey, warfare in the future is going to be based on drones. Having these big expensive jets that can get blown up by a couple $1,000 drone, maybe that's not a good idea. So, sadly, the machine just has a lot of momentum, and I think the machine is going to carry us into larger deficits. those deficits are going to get monetized like the ones in the past. And that's going to lead to more, by monetized, I mean printing, and that's going to lead to what I call the big print. And that's why it's just, in my view, so incredibly important that all investors recognize that the trends of the last 20 years aren't going to continue. The deflationary trend that we had going when China came in and we found shale oil, those things aren't going to continue. And in light of that, we're going to live in an inflationary world here until we solve this problem. And therefore, you got to have sound money. You got to own stuff the government can't print.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, securely saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. If we now focus about this new bill that has been adopted by the Congress, what does this mean? Because we will see then. I think it will add something like 300 billion to the deficit, right? This year
Yeah,
alone.
that's what the
The
CBO is
ceiling,
saying. Yeah.
the ceiling has been increased to 5 trillion. Elon said, like, yeah, we're whistling past the graveyard. Like, this is a big problem. America is going bankrupt faster than ever.
He's right
How
about that.
how does this then translate into the markets? Because then who will want to even own treasuries at this point?
Well, I think that's exactly right. I mean, that's, the point. I mean, there are a lot of things I watch every morning, but, the price of Bitcoin, gold, silver, the stock market. But of course, the other one I watch is the 10-year yield and the 30-year yield. And, the country is clearly on an unsustainable fiscal path, has been for some time, doesn't appear to be in any sense reversing that. And in light of that, the sucker at the table is the bond market. And so anyone who holds this government debt has to ultimately be coming to realize that they'll be paid in nominal terms. The government can print the money, excuse me, to pay them, but what's that going to buy? We're going to have a much higher price level. And so, we've seen with every cycle that the solution to the problem is inflation, to print the money and have inflation. We saw it in COVID, we saw it in '08, we saw it in 2000 to a degree. We saw it in 1998 when they bailed out LTCM. I mean, so it's just a persistent problem, only getting worse. And to me, there aren't in finance, there aren't that many one-way bets where you can have a really high confidence level on the outcome. And in my view, and this is one of those things where I have a really high confidence level of the outcome, which is they are going to inflate. Now, the line and the timing on this is somewhat uncertain, because they'll pretend that they're not. And Jerome Powell's trying to be Paul Volcker, and whether he can succeed at that until he times out in May, I don't know, but he's trying. And and the money supply has not been growing that rapidly, although it's started growing again. The banks are lending and it's growing. And my suspicion is that, with this big, beautiful bill and, Trump saying he's going to maybe appoint a shadow Fed president, everyone will start to come and anticipate that in the future, the money is going to be cheap again. And, we'll just continue to quote unquote melt up in the stock market and everything. I mean, being a short seller, short sellers are kind of an endangered species because, the government can just print the money to keep all the nominal values where they are or make them go up. And that's historically what's happened. I think it's what's going to continue to happen.
Some say that I've had a conversation with Willem Middelkoop recently, and
He's
he
great.
was just
Yeah.
saying that the way usually hyperinflation precedes, and that was based on referencing when money dies, is that when in Germany there was a time 2 years before the hyperinflationary period started that no one wanted to be in politics, that only sociopath and psychopath and all kinds of deranged minds and self-absorbed narcissists would actually do this, that there would actually be a shortage of people wanting to become prime ministers, presidents, or whatnot, or chancellors in the case of Germany, the fact that there was a big shortage of labor in the country, which we kind of also see since, especially since COVID, no one wants to really work, or at least not with those wages. That we are seeing more and more signs of this hyperinflationary, suddenly, but then gradually, but suddenly kind of
We
type of
are, we
movement.
are. I mean, yeah, I used to, hyperinflation is not my base case, but it's definitely a tail case that's becoming more likely. To get true hyperinflation, you need really crazy policies. I mean, you really do need the government to turn on the printing press and just never stop. I mean, and if hyperinflation comes to America, my thesis is it'll come, if for some reason in 4 years or 3.5 years, whatever, if Trump, if the red team's not reelected and the blue team comes in, we just saw a big blue team win, by the way, down in New York City with a socialist winning the primary, not the general, but he might win the general. The blue team will be very aggressive about printing money, and because they think you can, they think that there's no limit to how much you can print. And if you think these deficits are bad, wait until they start sending out new stimmy checks and, forgiving all the student loans and, spending more on all kinds of social programs, et cetera. And, right now a $2 trillion deficit looks big. Well, imagine a 3 or a 4 or a 5 or a 6. I mean, I don't think those are outside the realm of possibility, with the blue team in charge. And so, Stephanie Kelton, for example, the MMT woman as Treasury Secretary, right? I mean, she would push for that. So, I'm not saying we're going there, but I do fear that that's how you get to hyperinflation. I mean, if those guys get in charge, look out. Because right now we still have a semblance of sanity here, in the sense that Powell is trying to hold the gate, by keeping rates up. Now, one could argue whether it's smart or not. I don't know, but we're not. I mean, we're getting closer to the suddenly phase. The next print will tell us something about it, but I think the politics in 4 years will tell us even more about it. And my base case projection is that we're in a fourth turning. People are frustrated. In 3.5 years, inflation is going to be high. Trump's going to have made a lot of progress, but at the margin, and that's where these things are decided. The blue team will be promising a lot of goodies, and the voters will take it and they'll go for that. And then, of course, then we can really start the countdown to full on currency failure, because I could see it happening under the next blue administration.
Mamdani, the one that you were referring to, that is running for mayor,
Yeah.
representing the Democrats, even mentioned something like having state-owned grocery stores,
Oh yeah.
um, and all kinds of other programs that would also mean that there
Rent
would be a
control.
lot
I
of
mean,
fiscal.
he would turn New York City into a shithole. Just an absolute. I mean, it already kind of is in some ways. I have two kids who live there, by the way, but I mean, socialism just doesn't work. I mean, look. I mean, if it did, Venezuela would be rich. And it's not. They're not, in spite of having enormous natural resources in their oil fields. So yeah, it's I don't know. He hasn't won yet. I mean, there may be a challenge to him in the primary or in the general, and I mean, who knows what's going to happen here. But the point is that it shows you that there's a big block of voters that see the problems. I mean, and they want to choose that solution. I mean, look, you know. As much as I disagree violently with AOC and Bernie Sanders, the two big socialists in the U.S. Congress, they're right that there's a problem. I mean, they've identified a problem. They were right about that, and I understand. So some of what they say I kind of agree with, but the solution is just dead ass wrong. I mean, the solution isn't that capitalism is broken and then we've got to go socialist. No, the solution is this isn't really capitalism. This is crony capitalism. We've got to go back to true capitalism, which is fair, and all these problems will heal themselves.
To add to that, the fact that also, just in general, those problems are not understood. The monetary component, as we've also just mentioned before, the central bank policies and all of that are kind of the invisible hand.
Oh, absolutely. I
The
mean, this is a very subtle fraud they pulled on us, and that's why I didn't pull any punches in the book. I mean, I tried to really lay it out there and point out, like, look at some of the shit they've done. I mean, it's outrageous. The wife of Morgan Stanley getting a $220 million TALF loan. so she can buy assets non-recourse. I mean, what the hell about, what the fuck? I mean, that's in the book, right? I mean, what? I mean, it's just outrageous. I mean, the wife of the senator who approved the modernization of the Commodities Futures Trading Act, his wife is on Enron's board getting millions of dollars in payments. They changed that act and allow everybody to do all kinds of crazy stuff in futures and derivatives, and Enron blows up. I mean, you can't make this shit up. I mean, it's just the system is so corrupt and broken. It's like it really it's like 1789 French Revolution kind of stuff. I mean, fortunately for all those people who are benefiting from it, the guillotine's kind of not around anymore. But I mean, really, the elites have played their hand way, way, way too far, and there's going to be there's a backlash coming in a big way.
Now, if we look at the 1971 period that you also describe in the book,
Yeah,
Volcker's hike were hailed or seen as a very courageous way of,
yeah,
yeah, modern monetary bravery in a way, or at least the last great central banker, as what many would say. But
uh,
his victory was kind of only temporary, right? And
correct.
only
Because they
bought
still had a
time
lot of they
to,
still had a lot of inflation. Yeah,
yeah.
yeah. I mean,
So, like, did it only then buy time and showed that in the end nothing is really possible to act upon? And what would a Volcker 2.0 moment look like with what the Fed could potentially do, or there's really absolutely no
yeah.
recourse?
Well, so that's a really great question. So what Volcker did was he raised interest rates. I mean, I remember my grandfather thinking the dollar was going to fail in 79 or 80, because of the price of gold and what had happened and everything else. And what Volcker did was he saved the fiat system. He gave it another breath of life. I mean, by the way, he kind of he created the fiat system because he was at Camp David when they broke the gold standard, and they should never have done that. What they should have done is just replace the dollar in gold and said we're not going to be the reserve currency anymore. The gold is going to be the reserve currency. They didn't do that. And so, they had a lot of inflation in the 70s, and they realized they were losing it. They losing a grip on it. And so Volcker came in, put the rates up to 20%, nearly bankrupted my dad. Fine, and they saved the system and created a deflationary impulse and bought it another 40 years. From 80 to present, or recently present to 2020 as I'm marking as the period of peak deflation. Um, you know, if you were to try and do what Volcker did back then today, the whole world would go bankrupt. I mean, Volcker did that in the context of debt to GDP was US federal debt to GDP was like 35%. And today it's 120. Volcker did it in an economy where people weren't highly leveraged. Today you've got over $100 trillion of debt, all sector debt outstanding in the United States. That's compared to GDP, that's 5x, or 4x. It was much lower back in the 70s. And so, if we were to take rates up enormously and try and restore, soundness to the dollar, most businesses as we know them would go bankrupt because they couldn't service their debts. And, it would make the depression look like a tea party. So, that's just not an option that they have anymore. I mean, they could, I mean, well, I suppose they do have it, but I mean, just if you think about it, what I've always said is the government is faced with two problems. They can either, you know, default on the debt, let the debt collapse, have a massive depression where everybody who's too indebted goes bankrupt. And then, like a forest fire, you'll get new growth from after the smoke is cleared, or, they can inflate their way out of it. And, you know, most of the people in the government, in the banking system, in the Federal Reserve, et cetera, all understand that that first choice there of, let it all collapse and rebuild from the base, that's just not an acceptable choice. That the pain is too enormous, and that they would all lose their positions of power, and et cetera, et cetera. And so that's just not going to happen. So what they're gonna do is what they've always done. They're gonna do it slowly, and they're gonna do it, surreptitiously. They're gonna try and hide it. They're gonna lie about it. They're gonna do all the games they've done, but they're gonna inflate their way out of this. I mean, there's just no doubt about it. I mean, because that's what they've done in the past, and that's what they have to do. I mean, and the justification, just like Trump is doing it now. I mean, Trump didn't realize he was going to have to do this, but he's saying, well, this bill isn't exactly what I wanted, and the spending and so on and so forth. But don't worry, we're going to grow our way out of it. Well, good luck, because it's going to take a whole lot of growth to come out of it. I mean, we grew, just to be fair, we did have the same level of debt to GDP coming out of World War II, but they did a couple of things. I think they're going to have to do them this time around too. They did quantitative easing, which is to say they locked in. They did yield curve control. They set the 5 or the 10 year at 2.5%. And they also they set the shorter notes at a much lower rate. And they let inflation run hot for a while. But we had a much better demographic situation then because we had all these GIs returning from the war, and we had the automobile industry growing, and so they all built houses, bought cars, and we did the interstate highway system, and we grew our way out of that debt burden. That got down to a much more manageable level. So that's a way possibly we could go now, but the demographics aren't that great. We've got a lot of boomers, and they've got huge entitlements. They're not going to let them be cut. And, so we've got a real problem. I mean, back to your earlier issue, I mean, I think what's going to happen, the way I see this unfolding, is that eventually the bond market's just going to say no mas. This is ridiculous. We can't, I'm not buying these long securities. And of course, we've already seen some of that. All this stuff's going to the short end. But what'll happen is they'll cut the rates in the short end, and that'll make government borrowing costs come down. But it'll also lead to a lot of money creation, and that'll lead to a lot of inflation. And bondholders will just become an extinct species. And if we've seen the Fed in the past, when the 10-year bond gets over 5%, the Fed freaks out. I mean, they did it in the fall of 23, just like in the fall of 22, it happened in England with the gilt crisis. And Liz Truss had to immediately reverse all her policies. In 2023, the US 10-year went over 5%, and within 3 weeks, you had 12 Fed governors saying, "Oh, no, we're done raising rates." So, they're very much aware of the fact that if the bond market starts to revolt, they'll have to do something because, it'll create a problem. And, when you're a government running these kind of deficits, you have to have a bond market. So,
Hmm.
my sense is that what will happen is they will go back to QE, they will go back to yield curve control, they will go back to low interest rates, and we will all suffer from more inflation. And the way we solve this, like I say, the way we break this cycle is we move to inflation to currencies that aren't inflationary. And so they'll benefit as investments, they'll benefit vis-a-vis the dollar, and then ultimately they'll replace the dollar. And people will just, when people just won't want to hold dollars for any period of time. I mean, if you study all great hyperinflations, the people who are being paid. I had a great pod with a guy from Brazil who lived through it as a teenager, and he said, "Yeah, my parents would get paid. They'd immediately rush to the grocery store to buy food because they
Hmm.
knew it would be more in a week." And and so eventually, and ultimately, Brazil had hyperinflation. Currency became worthless, and so people think that can't happen in the United States because the reserve currency, the biggest country, we got all the weapons, etc. But when you pursue the policies that created that or had that happen in other parts of the world, even if you're the reserve currency, I think it'll eventually catch up with you.
Yes, and that's kind of like what we've also talked earlier to like kind of this direction towards hyperinflation, even though sometimes it might be overstated. That it is, as you mentioned, like long tail type of possibility. If we now look at the fact that you've mentioned also Lynn Alden, the fiscal train that will not be stopped, but now we also are seeing the monetary train that can't be stopped. So it's two trains colliding with each other. Maybe one could even say.
Yeah.
Um, um, what are the actions that you just mentioned about the post World War II policies that were implemented that you think the U.S. government, in tandem with the Fed, could still implement in terms of yield curve control or financial repression?
Well, they can cap the yield. They can do yield curve control, and they can and that'll bring down their borrowing. And they can cut rates to 0 or 1%. That'll bring down their borrowing costs. That'll help. They could go and attack some of the entitlements and the spending and the deficit spending on defense, et cetera, and that might help. And AI productivity growth and deregulation and other growth in the economy and reshoring a lot of things. And we need to do a big infrastructure build in terms of electricity in this country. I mean, all of those things would be net positives and could make things much better. Whether they can thread that needle and do it before the bond market totally revolts, it's unclear. It depends on how much money they have to print. I mean, so the currency, just historical fact, currencies fail when everybody realizes that they can never stop printing money, and it's a mathematical certainty that the printing is going to grow larger over time. That's when currencies fail. That's how hyperinflation occurs. When everyone comes to that awareness, then everyone abandons the currency. There's no demand for it. Everyone wants real goods or something other than the currency, and the currency goes to zero. And that's how you end up with banknotes in the Venezuelan streets or in wheelbarrows in Weimar Germany. So we're not at that stage yet. We're not even close to that stage. But like I said earlier, if we go towards that stage, and if the policies are aggressive about printing currency, and the MMT crowd wins and says, let's not worry about it. We just we'll keep the economy growing and we'll grow our way out of it, and we'll just print money to do it. Eventually, people are going to come and say, God, yeah, they're printing money to do it, but this money is just losing value so fast. I don't want it anymore, and that'll lead to currency failure. And they're ugly events. They're very ugly events, and I don't wish it on anybody. I mean, what the book talks about, and I have a policy prescription in the book in chapter 22. I mean, what I think they should do is a structured reset, where they say, look, they come out and they come clean. They say, you know what, we made a mistake here. We followed this Keynesian model. It's wrong. We don't need continual growth. We don't need to avoid deflation. What we really need is sound money. And so we should start issuing gold-backed bonds and Bitcoin-backed bonds, and we should start trimming the deficit, and we should slowly but surely transition over to a sound money standard. And yeah, by the way, you debtors who hold this old debt, well, guess what? You're going to suffer, but they're going to suffer either way. And having trying to put in good policies that structure a transition in that direction versus letting it just go to its natural end state, which is hyperinflation. It would be much better to try and do a structured reset. Just to give you an example, Roosevelt did a structured reset. I mean, there's massive deflation in the 30s, right?
Mhm.
And Roosevelt said, "Well, this is bad. The dollar's overvalued. We had this huge bubble. We've got all this deflation as all this debt unwinds. I got to fix this." And so, what did he do? Well, gold was the base form of money at the time, and he said, "I'm going to devalue the dollar in terms of gold." He took it down 70%. Overnight. He grabbed all the. I mean, he did a lot of shit that's illegal. I mean, I don't know how the Supreme Court supported him. He should never grab the gold. I mean, that was private property that he didn't have the right to grab. But he grabbed the gold. Then he turned around and he devalued, the dollar 70%. And by the way, when he did that, 1934, the market rallied. I mean, we actually had a real upturn in the depression in 34 briefly, but then it started to go back down again as that wasn't enough of a solution. He hadn't really devalued it enough, and so it really took World War II to get us out of the depression. But the point is that we need to do a currency reset. It's simple, and we can now. You got to have the political stones to do it, and that's hard. But we absolutely positively need to do a reset of the currency. That's the answer to the problem. And the thing is, these hyperinflations, when they've occurred in other places, one of the things you do see is they run to their natural conclusion. But then when these economies return to a sound money standard, they recover very quickly. Ecuador had one in 2000. Brazil has had a couple of them. They recover. I mean, people generally speaking want to, just go to work and make money and pay, pay their bills and take care of their family. And what's broken is the money. And the reason we're all suffering is that the money is broken. And if you fix the money, if you actually go back to a sound money standard, things will get better quickly. I mean, this is not like gloom and doom forever. This is just like, it's like you got a broken bone. You just got to set it and it'll heal. And that's what we got. We got broken money. We got to return to sound money and things will heal and get better quickly. But, the problem is that the system as constructed, all the people in DC, all the Keynesians, all the people with a lot of money and with a lot of power, they don't want to do that
Mm.
because it either takes away their wealth or it takes away their power, and they don't like that. But the good news is that Bitcoin, in a sneaky way, we're going to do it to them either way. So it's coming. It's just a matter of what's the path, right?
To go back to the currency reset, first of all, the U.S. has allegedly 8,000 tons of gold stored at the New York Fed and at Fort Knox, but no audit has been really made since the 1968, I think. And
Earlier, in the 50s, Eisenhower. But go ahead. Yeah.
Yeah. So needless to say that the audits haven't been done properly in a long, long time. So we don't even know if the gold is there. Then we have people like Musk and co that say, hey, let's do a live stream through the Fort Knox and see where the gold reserves are. Well, that died out pretty quickly because my probably Scott Besson told him, maybe you should shut up because we might not have the
Yeah,
gold.
so
Uh,
I have a theory on all that. I'm based on what I've heard from older guys who knew people in the Johnson administration Treasury. The gold's there, some of the gold's there. It's not all gone, and there might be some derivatives written against it, but those don't really matter because in the end, possession is 9/10 of the law with gold. But what I think happened is there was a gold pool in London in the 60s from 61 to 67 before it blew up. And I think Johnson got conned into sending some of our gold over there to help support the gold pool and didn't get it back and was pissed off. And so it was interesting. Trump and Besant came in and they said, Trump said things like, well, he who has the gold makes the rules. And we're going to audit Fort Knox. And my guess is what happened is they got read in on this, and then they got read and said, "Sir, not all the gold's there."
Bless you.
And yeah, yeah, thank you. And so what they've done is they've started bringing gold back, and that's why we saw these big imports out of London, and they're probably trying to replace it. But Besant is definitely a gold guy, and he's a sound money guy, and he's actually a Bitcoin guy too. And I think Trump kind of basically understands it, although I think he takes advice from his advisors. But some interesting data points out there. Andy Schechtman said that Judy Shelton told him that she had spoken to Trump, and Trump said, she's proposed a gold-backed Treasury bond, which would be a great thing. That Trump said to her something along the lines of, "Yeah, maybe, Judy, that's something we float in the summer of 26 when we have our 250th anniversary of the signing of the Declaration of Independence." And so, so there's some thought. I mean, and Besant has said things like, we need another Bretton Woods. He recognizes Triffin's dilemma. We need another Bretton Woods, and if and when we have it, I want to be at the table. So this is within a 4-year window because these guys, may or may not get reelected in 4 years. I mean, so it's clear to me that it's being discussed. This kind of a reset that I'm talking about is being discussed at the highest levels of the administration. Now, whether or not they'll have the political will, the guts, the courage, the ability to pull it off, I don't know. I think they can pull it off. I mean, it's interesting because in theory, all the rules about the monetary system should be controlled by Congress. I mean, that's what the Constitution says, right? Article 1, Section 8, gold and silver can be money, blah, blah, blah. But as a practical matter, presidents have set the rules. I mean, Lincoln just created greenbacks out of thin air, you know. Wilson, signed the Federal Reserve Act and took all the power away from Congress, or Congress passed the act, but Wilson signed it. Roosevelt just stood up one day and grabbed the gold and reset it. Nixon one day just said, "Hey, guess what? Your foreigners, your gold, your gold or your dollars, we can't exchange them for gold anymore. We're not doing that." So these were all executive actions. So it strikes me as precedent for some kind of an executive action where Trump/Besant say, "Hey, guess what, guys? We're revaluing gold or we're revaluing Bitcoin, and we're going to start issuing gold-backed bonds, Bitcoin-backed bonds, and we're going to put this whole thing back on a sound money footing." I think that's a very strong possibility. And of course, if it did, if you do any kind of math, there's absolutely no way they could take an action like that without having the price of Bitcoin and the price of gold go multiples higher of where they are right now. I mean, just
Mhm.
multiple because of all the fiat money that's been created. So to balance the two, you've got to have a much larger supply or price, of gold and a much larger price of Bitcoin.
Yeah, no, how exactly? What would be the step-by-step process? Because first of all, well, we just mentioned, okay, are the 8,000 tons of gold actually even there? If yes, okay, then if we would let's say market to the mark to mark value of the books in terms of like the price of gold today, then would it be even enough to make even a small
Well,
dent?
it depends. So Luke Gromen has commented that every $4,000 move in the price of gold puts $1 trillion in the TGA, which could be used then to pay down the debt. But the debt's 37 trillion. I mean, that's a great question, and the great difficulty in doing what I'm talking about is knowing what the right number is for both of these. But basically, the government would have to say something along the lines of, we're returning to a gold standard, and we stand ready to buy or sell gold at $30,000 an ounce, and that's the new price of gold. And so The minute they did that, by the way, the dollar would, the value of the dollar in terms of everything would go down substantially, and inflation would be extremely high on a one-time event, extremely high. But, we would finally return to some form of money that, the dollar would have a gold backing, or they could do the same thing with Bitcoin, or a Bitcoin backing, and say,
Hmm.
the government stands ready to buy or sell Bitcoin at $1 million a coin. I mean, the difficulty is knowing what level is the right level to create trust and to balance the buyers and sellers on both sides of that transaction. And that would be extremely difficult to figure out. But more realistically, probably what'll happen is we'll lean in that direction. I mean, this is what I think they're thinking about with this Bitcoin strategic reserve. They own, we think, although they there's another area they've kind of gone quiet. I mean, have they done an audit to know that they really have the 200,000 coins that they say they had? Biden said they had. And or will the Lummis bill pass and they start buying Bitcoin to basically defease the debt, which is what they should be doing.
Hmm.
But there's so many policy levers that the government has, that it's just impossible to know all the permutations of where we're going. But suffice it to say that this administration is a lot different than the last administration. I mean, they recognize Bitcoin's important. They recognize gold's important. They recognize that these are currencies that can't be printed. And I think they recognize that having a sound currency would lead to a sounder country. So, now, okay, so knowing all of that, how do we go from point A to point B? Who knows? I mean, you know, it's going to be very, very, tumultuous and confusing. But,
Hmm.
but I know, I often say, I mean, I wrote the book, I call it The Big Print. I'm a little worried maybe if it doesn't happen in 5 years, I'm going to look like an idiot. I don't think there's much chance of that. Uh, but I know which, as an investor, all you really have to do is on any particular investment, all you have to do is know which side of it you want to be on. And I like the side of it that I'm on. I mean, I like being long gold. I like being long Bitcoin. I mean, we have inflation in our future, a lot of it. Is it hyperinflation? I don't know. Probably not. Hopefully not. That's really a painful thing. But is there inflation in our future given the debt situation we've got and the construct of the political system we've got? Absolutely. Absolutely. And these two assets protect you from that inflation. So I
Yeah.
know, I feel strongly that you know which side of it you want to be on. The path, I don't know. I mean, and I've been very wrong. To discredit myself, I mean, I'll tell you, in 2008, I thought that was it. I thought, okay, here we go. I mean, when they did ZERP and QE1, 2, and I thought, my God, they're printing so much. This is nuts. This currency is going to fail. I was convinced of it, absolutely convinced of it. I was dead ass wrong. The reason I was wrong is they figured out how to bottle it up by paying interest on excess reserves and keeping a lot of that money supply in the banks. So what they did
Hmm.
is they really just bailed out the banks and it didn't seep through to consumer inflation. Now it did leak into asset inflation, which is why we got the everything bubble. But, so it's it's hard. I mean, we'll just have to watch the cards as they get turned over. But let's go back to first principles. You want to own what they can't print because they have to print mathematically. It's not really debatable. I mean, unless you think they're going to go for a depression, which is always a possibility, but I rate that as a pretty low probability.
So now let's imagine that more sound money type of future is actually materializing.
Yeah,
Um, which kind of collateral would you see something that, I mean, it's already a wild world that we would be living in already because it would be totally different. There wouldn't be like really any central banks. Bitcoin and gold would be seen as maybe the only type of actual real money. And if Bitcoin emerges then as the global risk-free asset, um, uh, would it then totally displace treasuries as collateral, or on
I think
institutional
so.
level, what role would it then
I think
take?
that's where we're going. Yeah, I do think that's where we're going. And so I'm very much with Sailor. I mean, I think $1 million a coin is just kind of falling off a log, and then higher numbers beyond that. But it takes time. I mean, these events don't just unfold in days, weeks, months. You don't always see the movement, but look over periods of time. I mean, the last time you and I spoke, maybe a year and a half ago now, Bitcoin was at 50. Now it's at 108. Add another year and a half, and it could be at 250. And I kind of think it will be. So it's yeah. I mean, what what is a risk-free the definition of what is a risk-free asset is very substantially changing, and we're right in the middle of that. I mean, you've seen bonds have been a terrible asset for the past 2 or 3 years. I mean, they've just lost so much of their value in real terms. I mean, in bond terms, Bitcoin's up, 2,000%, 20x. In bond terms, gold's up 200%, 2x. I mean, and the risk-free 10-year Treasury used to be the base layer of the entire financial system that everything was priced off of. And that's changing. That's going away. So,
Hmm. And so, how do you see then the role of gold in that? Is it just then a transition towards then that type of a world you envision that
yeah,
it would be
so I
fully
know a lot of big
Bitcoinized, or
yeah, so I know a lot of Bitcoiners think gold's just gonna disappear tomorrow, and I think they're being, they're not thinking this thing through clearly if they think gold's just gonna go away tomorrow. I mean, it's 5,000 years of history. I mean, yeah, it is just a shiny rock, but until Bitcoin came along, it was the base layer of sound money in the world and has been for 5,000 years in terms of protecting one from inflation. I think Bitcoin is going to steal gold's thunder and perform much better than gold, and will someday demonetize gold. But I don't think, I mean, we're a long way from that point, in terms of quote unquote the someday. Because it's first of all, Bitcoin's got to catch up to gold, and that it hasn't done that. And then it's got to push gold down to an insignificant fraction of the total reserves of, risk-free reserves, and it hasn't done that either. So, so gold is going to be a fine place to be, from a lower volatility, sound money, perspective. But Bitcoin's going to crush it in terms of performance because you've got the fact that it's sound money. You've got the fact that it can't grow in supply. I mean, that's the other thing. Gold does grow in supply. In 40 years, there'll be twice as much gold on the planet as there is today because we're mining it. And we know the supply of Bitcoin from now until forever. So Bitcoin's going to crush gold, but that doesn't mean gold's not going to do well nominally versus fiat. Gold's going to do fine versus fiat. I mean, I see gold 10,000 easy. I mean, probably much higher, but I can easily see 10,000. I see, Bitcoin 1 million easy. Where we go beyond that, I think it has a lot to do with government policies. I mean, who's running the show? How much money are they printing? What are they doing? Are they trying to be fiscally responsible? There are too many moving inputs to know with certainty exactly where it's going to go. And both of those are just estimates on my part. But I'm very, very confident they'll both be higher. They will have higher value in fiat terms, kind of every year going forward.
in the meantime, we've also seen, if we look at now the current 3 years, and especially the last maybe 2 decades, that central banks have been becoming net purchasers of gold.
Well, that's right.
Um,
Yeah.
and then also China has then, in a lot of interviews I have, many experts think and claim, and it's not just them, it's also like some news outlets like I think the Wall Street Journal made also this claim that China has up to 10 times the reported quantities of gold, so
I think that's
bringing them
right.
to like 18,000 tons of gold. So who has the gold makes the rules, as you said.
Yeah,
There
I
would
think Willem
be,
thinks it's 30. Yeah.
yeah, even
Yeah.
30. I'm just gave a conservative estimate here.
Yeah, right. I mean, so we know they have more than they've reported, and the reason we know that is we know what they mine every year, and that only takes you kind of to a little above what they reported. But we also know what they've imported from Switzerland every year because the Swiss have export data that we've seen. So China has a lot more gold than they're saying. Yeah, and central banks are buying gold, and this is because, and you really, other than El Salvador, you really don't see any central bank, or very few. I think Bhutan might be doing it, but you don't have any
Czech
major
Republic
country.
was actually like considering it with
Is
the
that right? Oh,
governor.
that's good news. Okay, but
Yeah, the
basically you don't have any central bank buying Bitcoin, or very few central banks buying Bitcoin, and it's just because it's not a proven enough asset class. They're not comfortable with it yet, et cetera. I think that'll change over the next 5 or 10 years. But yes, they go to the tried and true sound money alternative, that they can hold on a bearer basis. I think it's interesting. If you've seen more and more central banks saying, who have their gold custody somewhere else, I mean, they're like, well, send it back to me, because they recognize that in some kind of a big currency event, possession will be 9/10 of the law. So, yeah, the central banks will probably try to reset to gold first. I mean, and I've often said, and Jason Lowery had a book on this thesis, and I think he's right, that the way for the US to remain competitive vis-a-vis China is just to skip the gold step and go right to Bitcoin. Because Bitcoin will, in my view, win in the longer term because it's a better form of collateral. and it's got a number of advantages vis-a-vis gold. But I think as a practical matter, when you consider politics and how things work, a lot of countries will gravitate towards gold, and then over time, they'll add Bitcoin, and then eventually Bitcoin will replace gold. But these things take time. They take not months, not years, arguably decades. So gold. I had somebody ask me that I had a Bitcoin say that well, gold's going to go down in value from here, and I said that it's just I see no scenario under which that happens. None, zero, in fiat terms. I mean, yeah, it's going down in value in Bitcoin terms, sure, but in fiat terms, gold will continue to go up in value. Bitcoin will go up more. So there's a role for both. I mean, I call gold analog sound money and Bitcoin is digital sound money. And we live in a digital world. And that adoption curve is why Bitcoin's going to crush gold's performance.
One question I was also like asking myself, and I would like to have your take on that, is Michael Saylor's strategy with strategy
Yeah.
is to accumulate as much Bitcoin as possible. So in one form or another, if you're your own bank, and in that case, the own bank of strategy is themselves, they're their own central banks to say,
Hmm.
would that be the kind of de facto privatization of a form of not central banking, because they won't be able to print Bitcoin, but they will have definitely a considerable amount versus the rest of the network? Or do you think it's something that throughout time will scatter and distribute itself?
Well, I don't think he's indicated a willingness to ever sell any of what he has. So I think he's going to hold it. And I think his company will probably become the most valuable company in the world someday, as the Bitcoin price continues to appreciate. And I think that collateral will then allow him to enter and do other businesses where capital is required, and that capital can earn a return. So I think what strategy and Saylor have done is absolutely brilliant. And I think he's the big daddy, and he's the pro at it. I just finished a review of all these preferred stocks that he's issued, and it's kind of a genius thing that he's doing to tap other pools of capital that can't buy Bitcoin, but they can buy a preferred, and that allows him to buy Bitcoin. And so, I'm very bullish on what he's doing, and MicroStrategy in general. As you know, he's had a lot of copycats, and I think some of them will do fine. I'm not 100% sure that all of them will do fine. I think there's management risk when you have a company, and they all, or many of them, not all of them, but I think ultimately all of them are in a sense using some form of leverage, to try and enhance the return. And yeah, Bitcoin is growing fast enough with a high enough rate of return that you don't necessarily need to use leverage. But I guess some people have decided they want to, and that's fine. But I think people just have to recognize what they're doing when they use leverage, because Bitcoin is subject to pullbacks, and they can be severe historically. I don't think we're going to have the kind of pullbacks we've had in the past in the future, but I think the last one's in the 70% range. I think we'll be in the 50 or 60 at the highest, but I could easily see the Bitcoin squirting up to 200, 300, 400,000 in this cycle, and then correcting 50% off of that, and coming back down to half of what the top was. So, and if you're over leveraged in that cycle, and if you're buying it at the top on leverage, well, you're gonna experience regret when you have that pullback. So,
In that sense, would then the strategy adopted by Saylor, the basically Bitcoinification of corporate treasuries, maybe be a Trojan horse into institutionalizing even further the reserve of bitcoins beyond just individuals, but then towards corporates, and from corporates to institutions, and from institutions to actually government?
absolutely, absolutely. I mean, I think again, this is the best asset in the world. It is absolutely the best asset in the world. Now, the beauty of it all is that you know that, and I know that, and other Bitcoiners know that, but the world doesn't know that yet. And so that's why we get to buy it at the price we can buy it at today. And when it's more fully distributed as the best asset in the world, the price is going to be much higher. And in fact, arguably, and this gets into an interesting thing. I mean, Saylor has this projection where he says, well, in 21 years, we'll have $21 million Bitcoin. That's fine. That's probably true. I can't dispute his model per se, but I do will gasoline be $1,000 at that point? I mean, how much fiat creation will take place between now and then? And I think what's going to happen here, like I say, is I think eventually, um, we're going to stop measuring things in dollars. I mean, my kids are going to use sats. I mean, it's, a sandwich is going to cost 3 sats or whatever it might be. I mean, it's, we'll see Bitcoin will become quote unquote the numeraire, because it's fully distributed and it's the best form of money. So I see that happening now, not tomorrow, not in 10 years, but probably in 20 years. I think that's probably a likely outcome.
Hmm.
Um, and so, the dollar price of Bitcoin, I mean, people are like, well, what's a dollar? Well, that's the currency we used to have before, the government screwed it up. Um,
Hmm. But don't you think? I mean, if we look a bit of a history and the let's say the disruptive nature of Bitcoin has been already talked through and through, and the ones that are sitting on the top, the elite, the system that has way too much incentive in this fiat-driven system, will just like it did with gold, that is kind of like this fire alarm, want to kind of manipulate it or control it in one way or another. And that is maybe one of the most important topics, is the fact that it might be used as a way of either controlling through KYC, knowing who you are and how much you have, and the access to your wallet and so on, and choke entry and exit points from throughout exchanges and so on. What are your perspectives on this, or worries of, let's say,
well,
the
yeah,
darker
I mean,
side of that future?
yeah, well, that's so let's go back to what I talked about earlier, where blue team wins, right? I mean, I think the horse is out of the barn on Bitcoin, and you can't stop it now. It's kind of inevitable what's going to happen here. But let's say blue team wins, and they kind of collectively decide, hey, this thing is ruining our fiat currency. We need to tax it. Shut down these on ramps and all the kind of choke point stuff that Warren was talking about. Maybe even grab it. Let's seize these ETFs and just pay everybody out in cash, right? I mean, that's what FDR did with gold. I think although I don't think those are likely, but they're not impossible. And but I think Bitcoin's got a solution to this, which is self custody.
Hmm.
And the government can say, "I'm going to tax your Bitcoin." Really? How much do I have? I don't know. I lost my keys. Um, the government can say, "Turn it in." Again, I lost my keys. I don't have it anymore. It's an amazing financial tool, in the sense that historically, I mean, wars were fought over property and money. I mean, you'd overrun a country and you'd steal the property, or you'd steal the money, or you'd steal whatever you wanted. And I mean, here's something that an army can't get your Bitcoin from you unless they can get your key, and
Hmm.
you can keep your key secure in a way that nobody can get it from you. And so, I think governments are going to lose a lot of the power that they have, or that they think they have, because as a practical matter, they're not going to be able to exercise it, right? Um, that's kind of how I see it. So, but will they try all those things? Possibly. I mean, the other thing to keep in mind is that Bitcoiners are mobile, right? I mean, if and it's a big world, and so if the U.S. decides to go super hard negative on Bitcoin, well, El Salvador is going to have a whole lot of immigration. I mean, right? So it's an interesting problem for the governments to try and put it back in the can, because I don't think they can. I really don't.
Fair. And I'm not tempted to ask your last question, but it might lead out to a bit too much digging into that. But I wanted to actually talk about Tether and the fact that there
Yeah.
was unallocated. The fact that if we see Tether as, yeah, well, one of the Achilles heels of the crypto ecosystem, in which Bitcoin is able to fuel from as well, and that the treasures that they're holding as equivalent of cash is then starting to deteriorate,
Yeah.
then how will this play out? But then,
Well,
like, now, out of,
Tether's
yeah.
holding mostly very, very short-term treasuries, so they're not going to lose a lot of money on a short-term thing if interest rates shift a lot. But it's interesting. Tether and Circle are very interesting cases. It's about $250 billion of stablecoin demand, and a lot of that demand goes into treasury bills. And I think that's why Trump, in part, has grown to like Bitcoin, and Basant too, because hey, they've got a natural buyer here for some of the debt they've got to sell, and we've got a lot of debt to sell. Still the rollover this year is something like $9 billion or $9 trillion, and 250 billion of stablecoin demand is not a big amount compared to 9. But guess what? If Bitcoin goes up a lot and more people use stablecoins, then the demand becomes more meaningful. And I think Circle is obviously playing with the government, and they're doing everything right, and they're audited, and they're in the U.S. and all this. And Tether's view is, hey, we don't need that. A lot of our demand. I mean, it's interesting. I was at a conference in Prague. I met a lot of people from Russia, and what they told me was that when the U.S. seized the Russian assets, every single oligarch and business in Russia immediately got a cryptocurrency account and started transacting in stablecoins because they got shut off from SWIFT, right? I mean, they can't trust America anymore. They may actually even still want to, deal in dollars because it's kind of the most liquid currency. But how are they going to do that? They can't do a SWIFT wire anymore. So what are they going to do? They're going to have a stablecoin account, right? And just say,
Mm.
hey, yeah, I'll ship you this good, and then turn you send X dollars stablecoin to my Binance account, right? And so there's a real demand for stablecoins. I mean, but let's not kid ourselves. A stablecoin is not Bitcoin. It's still dollar denominated. If the dollar becomes worth less, that stablecoin becomes worth less. So, but they may, as a practical matter, help the government finance its debts a bit longer as Bitcoin grows and stablecoin usage grows. So that there is that. I mean, to me, a stablecoin, it's really just a dollar on a crypto rail, right? I mean, and when we've kind of got that with credit cards and everything else, it's just that businesses don't make $40,000, equipment purchases on a credit card. You know, they do it with a Swift wire transfer, and if you're outside of the U.S. purview and you don't trust the U.S., well, then a stablecoin is a better alternative.
Larry, I think that was it. Otherwise, we might go down the rabbit hole on other topics maybe another time. But
Okay,
thank you, thanks a lot for
thank you.
coming
I
on the
always
show.
enjoy
And
talking to you. Yeah,
yeah, it's always great. And I missed that; it was way too long. So I hope that the next time will be sooner than later.
absolutely. I'll just ping me, and I'll try and make time. So like I say, I always enjoy talking to you. So um, you know, look forward to it, and hopefully next time we speak, Bitcoin will be up the same percentage it was from last time to today.
Yeah, and for the listeners and the viewers who are have not read the book from Larry,
On
here it
book.
is, the big print. It's now also in hard copy, available on Amazon. Right, I'll put a link in the
It's all on
description.
Amazon. I self-publish. Yeah, it's hard copy, audio, soft copy, EPUB, Kindle. So it's all up on Amazon, and yeah,
And people can obviously find you on Twitter
I'm
at
on Twitter a lot.
Lawrence Lepard. Exactly.
Exactly. Yeah. So yeah. Uh, look forward to the next time we speak.
Yeah. Thanks a lot, Larry. Take care.
Okay.